Jonathan Barratt, the Chief Investment Officer at Probis Securities. Jonathan, hi, good afternoon. Thank you so much for making time for ET Now. First up, let me begin by asking you what do you make of this entire Russia-Ukraine tussle and the impact it could have? You do have a year on the ground, so perhaps you can explain to us better. Are commodities already pricing in the worst?
Look, it's a very volatile situation. When you look at where Russia is placed in terms of its supply of some of these commodities, particular oil, and you look at the fact that they've sort of announced their position, it's caused a major concern that they will actually get through a lot of diplomacy, some form of military action. I guess we're all hoping that's not the case, but when you look at the commodity front, we're already faced with a market that is very tight in terms of supply, and any form of disruption to that will see commodities spike to the top side or continue, as we've already seen, for instance, for some of those base metals, copper, and of course some of those soft commodities such as wheat, barley and canola. So quite volatile, and I'll expect that to continue for the short term.
Okay, that point is taken, but let me take commodity by commodity and let me start with crude. We're already staring at the level of $100 practically on crude. Do you see it heading towards $120 and $150, something which is the experts are not ruling out? What are the next levels to track, and how much premium will you award to this entire geopolitical tension when it comes to the crude prices?
Look, I think crude, as we know, there is not a lot of spare capacity in the market. So any form of disruption to the market will cause it to spike. Ukraine is not a very large producer. I guess it's a fact that Russia is obviously a major producer, and any sanctions on that could squeeze supply even more. But remember, there's not a lot of spare capacity in the crude oil market. As a result of that, we can see it trade through that US $100. But I do think there is a level of diplomacy that is expected. And I feel that there is more talk to happen before anything really happens. I think when we've seen those two provinces, annexed as republics, it really is that recognition that Putin is moving one way and the West is moving the other way. So when we look at the price, US $100 is there. Could it get to 130 where we've seen it before? I think there's a long road to go before it gets to that level. And I don't think a lot of economies can handle oil at that level. Maybe a spike through that 100, 105. But I feel diplomacy will prevail and prices will then come lower.
So what I understand from what you're telling us, Jonathan, is that level of around $100, $120 is something which is unsustainable for a lot of countries across the globe. So in that context, do you expect that the entire Ukraine-Russia tussle that we are talking about is only transient in nature, and you expect the crude prices to fall back to the $80, $90 per level? What will be a sustainable number, really, from a 3 to 6 month point of view?
Well, I think when you really look at what's happening with crude oil prices over the last 12 months, where we've seen that huge amount of volatility, I think we can continue to see the same. But when I look at it, the more of that balance area for crude, I think we all agree that US $75 a barrel is probably which is sustainable for both parties, or both suppliers and consumers, because that makes economies go. So at this level, I would expect more supply to come on the market. But the concern that I'm actually holding is whether or not there's that capacity for that extra supply, and that worries me. So when we look to that 3 to 6 months, we've got to wait and see how this reacts, how the Ukraine situation reacts, the geopolitical fallout of that, and then we'll sort of come back to some good rationale. I do think there's a lot of hype in the price at the moment, so I don't think it's sustainable, and I would like, if I look down to that 3 to 6 months level, see prices come back to that 75 to 80 US dollars a barrel.
Good afternoon, Jonathan. This is Cheryl also joining in the conversation. Let's talk about natural gas prices. We all know that Russia is a key supplier of natural gas to the Western Europe, and given that this particular conflict, or rather the tensions are rising, we've seen the sharp spike come in about the natural gas prices as well. Where do you see these prices settling in? Because the fact that if they go ahead for sanctioning Russia, as all the Western nations have been talking, natural gas will be one of the most hit, and don't think that Europe would want to take that chance, right?
Well, I think you're 100% right. And I think that's why Putin got in touch with the French and also the Germans, because obviously Russia does provide a lot of natural gas. to Europe, and I think that's a concern for any economy that's starting to look a little bit fragile. So I think he's sort of trying to assert some authority, but at the end of the day, we can't see natural gas move too much higher. We are close to record levels, but when you look at the US price, you can see that we've had days of rallying 3, 4, 5%. I think this is sustainable. I can remember trading natural gas when we were around the $12 to $15 BTU mark, and that would be about 15 years ago. So it is quite possible that we could see prices move to that mid $7, $7.50 a BTU on the back of these issues if they start to escalate. But at the moment, it is one that's running a bit scared, and prices in natural gas, as we know, particularly over the winter period, and any form of additional concerns like the Ukraine, will continue to see prices go to the top side.
Right. Jonathan, let's talk about gold prices, safe haven as we all call it, gold. Where do you see the prices headed now? Because it's almost near 1-year high levels. What's your target for the gold? Do you see it surpassing, reaching that $2,000 per ounce mark?
Well, I think we've all agreed that we feel that gold is in this upward trend, and we have agreed for some time, but it has been very boring, over the last couple of months, except for this heightened concern. Look, technically it looks quite strong, and technically it sort of sees it can trade through to that 1840 up to 1870, even sort of surpassing or getting close to that 2000 mark. Really, we got to see what the fallout is. Remember, it's geopolitical concerns that we're seeing, plus inflation. If all our commodities start to remain on this top side, then we will see those inflationary pressures start to filter through, and then people will go towards gold as a safe haven. But technically and also fundamentally, it does look strong with that break we've just seen. So I wouldn't be surprised to see prices further higher. 1840 is a good level. And of course, I think if we all can get it to 2000, there'll be a lot of happy people.
Jonathan, point taken. Thank you so much for joining us on the show, giving us a take on various commodity markets like crude, natural gas, as well as gold. That was Jonathan Barratt talking about the commodities.